With gold prices reaching all-time highs, I was looking for a way. Is there a way to short gold with an ETF? I found a couple of ETFs where you can short gold. The Proshares Ultrashort Gold seeks daily returns of -2 times the daily performance of the Bloomberg Gold Subindex. Here you can see as the gold prices have gone down, it's gone up, and vice versa. Now, since the price of gold has gone up a lot recently, the performance of this ETF is not very good. But this will change if the price of gold goes down. This ETF's been around since 2008. It has a high 0.95% expense ratio. It basically shorts the gold futures index. So you can see they're holding some swaps with some various banks. Now, the other ETF that I found is a Direxion one. Now, the Direxion one is a two-parter. They have a bull shares and a bear two-time shares. And this is the gold miners index. So this one doesn't short the gold index. It shorts gold miner stocks. And I'll show you that the performance for that is different than just the price of gold. Now, DUST is the one that I'm interested in, the Direxion Daily Gold Miners Index Bear Shares. This is the one that shorts gold, DUST. It has a high 0.93% expense ratio. It's also a 2 times leverage ETF. And this one's been around since 2010. Now, this one basically shorts gold miner stocks. And so you've got Barrick Gold, Newmont Corporation, etc. But some of these companies also mine silver. So if you invest in this one, you're actually shorting gold, silver, and some other metals, not just gold. It says it right here. The funds do not invest directly in or directly short gold futures. Now, these ETFs are fairly small, but they have been growing in popularity. If we look at the Proshares Ultrashort Gold, they only have 124 million in assets, but this has increased recently from about 50 million. So it's in the last couple of months, it's actually gone up. If we look at the Direxion Gold Miners Index Bear Shares, it's also gone up in value from about 40 or 50 million to 132 million recently. And the volume has gone up, as you can see here. If we look at the 1 month performance between the Direxion Gold Miners Short Shares and the Proshares Ultrashort Oil ETF, we can see that they've both lost quite a bit of money, 25% down and 18% down, as gold prices have gone up quite a bit. Now, if we keep going further out, we look at the 1 year. The Direxion one is actually has lost more money. This is the one that shorts gold miners. So whatever profits the company has, you're also sort of shorting that. And minus 48% for shorting gold, minus 64% for shorting the gold miners. And if we look at these two, they don't actually go up in tandem. As the price of gold goes down, it usually goes down, but they're not always in sync. It looks like the Direxion short gold miners goes up and down a lot more aggressively than just shorting gold. And when we look at the 5 year, it's lost 90%. As you can see here, there's a huge swing. As the price of gold miner stocks went down, this one went up. And the gold miners over 5 years has lost 90% versus minus 70% for the other one. So this is definitely not a long-term strategy. This would be an extremely short-term strategy. When we add the S&P 500, we can see just how much better the S&P 500 did. And if we look at the 1 month, even with the stocks going down, the S&P 500 has still done better at minus 3% for the 1 month versus minus 25 and minus 18 for the shorts. So I'm not advising to anyone to short gold, but if you were going to short gold and you believe it's too high right now, these are 2 ETFs where you can sort of do that. So anyways, I hope you liked this video. Please make sure to like and subscribe.